Hey everyone, welcome back to Corporate Decoder, the place where we unravel the secrets of corporate giants. And today we're diving deep into International Flavors and Fragrances Inc.'s latest 10. K report a document packed with juicy details about their business, from the products they create to the money they make and the risks they face. Get ready, because this investigation is going to be a wild ride. We're talking about a company that shapes the very tastes and scents of the products we use every day, from our morning coffee to our evening perfume, and their latest filing reveals a lot about their current standing and future plans. Strap in as we decode International Flavors and Fragrances Inc.'s entire business landscape. So what is International Flavors and Fragrances Inc.? All about, they are a major player in creating flavors and fragrances for all sorts of products. Think food, beverages, health stuff, and even perfumes. They are big in taste, food, ingredients, health, and biosciences and scents, and they even had a pharma solutions segment until they sold it off in May of 2025. Let's talk numbers straight up. Their sales in 2025 hit a cool $10.89 billion. That is a lot of dough, but it is actually a slight drop from the year before. That might sound worrying. But when you dig a bit deeper, you see that on a comparable currency neutral basis, their sales actually went up 2%. So this means that even though the reported numbers look a little down, the underlying business is still growing, which is a good sign. Now let's look at their gross profit, which is basically what is left after they pay for the stuff they make it with. In 2025, gross profit went down by 5% to $3.938 billion. This decrease was mostly because they sold off some businesses, which makes sense, but they also saw some volume increases and productivity gains, which helped a little. Okay, this next one is a big one. The company had a massive impairment of goodwill of $1.153 billion in 2025. This sounds scary, but it is basically an accounting adjustment where they realized that some of the value they thought they had from past acquisitions wasn't actually there anymore. In simpler terms, they overpaid for something, and now they have to admit it. This was a big hit to their reported profit. Looking back at the numbers for goodwill impairment, you see a huge jump in 2025 compared to 2024, where it was only $64 million, and in 2023 it was a whopping $2.623 billion. This shows that the company has gone through some significant financial surgery over the last few years, trying to correct past mistakes with acquisitions. This part explains that massive goodwill hit. They reorganized their business segments in January of 2025. The Nourish segment was split into taste and food ingredients, and goodwill had to be moved around. Unfortunately, after all this, they realized the food ingredients part wasn't worth as much as they thought, and that is where the $1.153 billion impairment charge came from. Let's break down their segments. First up, taste. Their sales in 2025 increased by 2% to $2.481 billion, and on a comparable currency neutral basis, which means ignoring currency fluctuations, and sold businesses, they were up 4%. This growth was driven by more sales across the board. Next is food ingredients. Their sales here actually dropped by 3% to $3.278 billion in 2025. While prices went up a bit, they saw lower volumes in their protein solutions and inclusions businesses, which suggests some headwinds there. Health and biosciences is a growing area. Their sales went up 4% to $2.283 billion. This growth was fueled by more volume and price increases in certain parts of the business. The scent segment also saw a slight increase of 2% in sales to $2.479 billion, driven by their fragrance compounds business. Even though fragrance ingredients saw a dip, this segment is a bit of a different story. Pharma solutions sales plummeted by 65% to $369 million. This is a direct result of them selling off the Pharma Solutions disposal group and their nitrocellulose business in May of 2025. So while the remaining underlying business grew 12% in comparable currency neutral terms, the reported drop is massive because the business is largely gone. When we look at their adjusted operating EBITDA, which is a measure of their operational performance before some big one, time cost, their total adjusted operating EBITDA actually went down by 5% to $2.086 billion. However, on a comparable currency neutral basis, their adjusted operating EBITDA increased 7%. This tells us that after accounting for currency effects and the businesses they sold off, their operations are actually getting more efficient. In the taste segment, their adjusted operating EBITDA went up 4% and an even more impressive 10% on a comparable currency neutral basis. This is good news, showing strong performance in their flavor business. Food ingredients here also saw a solid 4% increase in EBITDA and a strong 10% on a comparable currency neutral basis. This suggests they are improving efficiency in this segment despite slowing sales, which is a positive sign. Health and biosciences showed a 3% increase in reported EBITDA and a 7% jump on a comparable currency neutral basis. This segment continues to be a steady performer for them. Scent's reported EBITDA dipped by 6%, but on a comparable currency neutral basis, it increased by 2%. So while overall Scent business profitability is down slightly, operational efficiency is improving. Pharma Solutions also saw a huge reported drop in EBITDA by 65%, but their remaining underlying operations actually grew 16% on a comparable currency neutral basis. Again, this highlights the massive impact of the divestiture on the reported numbers. Now let's talk cash flows. Their cash flows from operating activities in 2025 were $850 million. This is down from $1.070 billion in 2024. The main reasons cited are an increase in working capital and a larger incentive compensation payout, which means they paid out more bonuses in 2025 for the previous year's performance. On the investing side, things changed dramatically. Cash flows provided by investing activities were $2.269 billion in 2025 compared to just $326 million in 2024. That massive increase is thanks to all the money they got from selling businesses like Pharma Solutions' nitrocellulose business. And others, this extra cash is a big deal for their financial flexibility. When it comes to financing activities, they used a lot more cash in 2025, totaling $3.091 billion compared to $1.606 billion in 2024. This is primarily because they spent $2 billion buying back some of their own senior notes, which is a way to reduce their debt load, and returned capital to shareholders. And speaking of debt, their total debt was $5.994 billion. This is down significantly from $8.977 billion at the end of 2024. This reduction is a direct result of those business sales and the buyback of their senior notes, which is a strategic move to clean up their balance sheet. They also have a revolving credit facility, and to keep it good standing, they need to maintain a certain ratio of net debt to credit adjusted EBITDA. In 2025, they kept this ratio below 4.00x, which is good news for their financial health. Now for a quick look at their financial instruments, which are basically tools to manage risk, they have foreign currency forward contracts and cross-currency swaps to protect themselves from fluctuations in currency exchange rates. In 2025, they had derivative assets of $18 million and derivative abilities of $242 million, showing they are actively using these tools. In their accumulated other comprehensive income part, you see a big number for foreign currency translation adjustments. The good news is that in 2025, this was a positive $1.153 billion after a negative $774 million in 2024. This means the value of their foreign assets and liabilities grew significantly due to currency fluctuations. This is a complex topic, but in simple terms, more favorable currency translations translated into a big positive swing for their overall comprehensive income. Let's talk about restructuring charges. These are costs associated with reorganizing the business in 2025. These charges increased to $70 million, mainly due to costs from their IFF productivity program. These programs are designed to make the company more efficient, but they come with a price tag. And there it is again, that big impairment of goodwill. We talked about this earlier, but it is worth noting that in 2025, it was $1.153 billion, a huge increase from $64 million in 2024. This really highlights the impact of their business changes and past acquisition decisions on their reported financials. Now, for the legal side of things, they mentioned various legal claims and actions like antitrust investigations and class action lawsuits. In 2025, they entered into a settlement agreement for nearly $26 million related to fragrance products. In the US, this is a significant cost, but it helps them avoid the uncertainty of further litigation. Looking at their financial instruments, they use commodity contracts, but here is an interesting tidbit in 2025. Their commodity contracts had an asset value of $105 million, indicating they might have profited from these contracts, while in 2024 they had a loss of $102 million, showing the volatility that comes with these types of instruments. No corporate filing is complete without a discussion of risks, and International Flavors and Fragrances, Inc. lists quite a few. They are worried about consumer demand, changing regulatory trends, intense competition challenges, in executing their strategic transformation issues with managing inventory, legal claims, and especially supply chain disruptions due to things like trade wars, geopolitical events, and natural disasters. They also call out cybersecurity risks and AI-related risks as modern threats. So what is the story here? International Flavors and Fragrances, Inc. is a company in the middle of some major transformations. They have sold off significant parts of their business, which has clearly impacted their reported profits. Especially with that massive goodwill impairment, this sale of assets has brought in a lot of cash, which they're using to pay down debt and return capital to shareholders. Operationally, the underlying business in segments like Taste and Health Foodia MP Biosciences seems to be doing well with growth in EBITDA, even though the reported net income is negative this year, due to all the one-time charges the core business seems to be holding up and improving. In efficiency, the legal settlements are also a significant factor, but settling these cases can bring a sense of closure. My take is that International Flavors and Fragrances Inc. is navigating a complex period of change. They are de-risking their business by selling off less profitable or non-core assets and focusing on what they do best. The key challenge will be to continue growing the profitable segments and manage those lingering risks like supply chain disruptions and legal battles. Effectively, if they can execute their strategy and maintain operational improvements, they could be in a good position long term. Alright, that is our deep dive into International Flavors and Fragrances Inc. Latest filing, did any of these numbers surprise you, or do you have any other insights to share? Let us know in the comments below. If you found this breakdown helpful, give it a thumbs up and subscribe for more corporate investigations. And hey, if you want to connect with other finance enthusiasts and get more exclusive content, check out our Discord channel, linked in the description. Thanks for watching, and well, see you on the next episode of Corporate Decoder.